Hello, I'm Chris Pedersen and this is Stock Watch for Wednesday, the 20th of March, 2024. All information is general advice and may not be suitable for you. Always consult your financial advisor before making any investments. All questions from viewers should be sent to stockwatch@fnn.com.au. RBA update from yesterday's monetary statement. 1. Overnight rates are remaining unchanged at 4.35%. By the way, this is not unexpected. The RBA feels inflation is coming down, but not as quickly as desired. My comments are the following. Central banks make decisions on what has least probability of being harmful. Leaving rates unchanged is safe for now. Only when economic data is showing that inflation is moderating faster and not lowering rates is slowing the economy dangerously will they start to lower rates. RBA errs on the side of caution. They do not try to aggressively forecast what might happen in the future. The difficulty is the lag effect and the unknown as to how long their actions take for it to permeate through the economy. For example, business and consumers do not react instantly with every pronouncement by the RBA. This is a fascinating chart on shipping rates from China to the west coast of the United States. The reason I included this is it shows that right now there's a conundrum. Long-term shipping rates are way low, but short-term rates have spiked up. Thus, when companies are trying to renegotiate their contract, what rate should be used? Obviously, the shippers want the higher rate, and the people who are exporters or importers want the lower rate. And this is another chart dealing with export and import volumes going into and out of U.S. ports. It's fascinating. It's worth taking a look at for which ports are most active. This identifies Long Beach, Los Angeles, which is close to each other, New York, Houston, etc. Requests from StockWatch viewers. Well, this week I have two companies I'm covering. Both are requests. One is from December, which I wasn't able to get to earlier, and another is more recent. The first one is corporate travel. The code is CTD on the ASX and it's currently trading around $17. Looking at this 5-year chart, you say, well, there's not much happening here. Why should I even bother looking at it? However, it's not just charts. We look at the financial numbers behind them. First of all, market cap is around $2.5 billion, so it's a fairly large company. UBS has a price target of $21.80. I think this is probably pretty justified. Revenue growth rate from 2023 to 2026 is 11% per annum. Earnings per share growth the same period is 23% per annum, and the dividend growth is 28% per annum. Now let's go back a minute. During COVID, travel was a disaster. So these growth rates are off of a low base, which makes it easier. That is why I'm going 3 years out, not just 2 years out, in terms of estimates. The PE on the 2025 earnings per share estimate of $1 is only 17 times. That is below average for the ASX non-mining, non-financial stocks. The yield on the 2025 dividend estimate is 50 cents. So this is a yield around 3%. Free cash flow is attractive at around 6%. And this is what I like is they're only paying out 50% of their profits in dividends, so they're retaining it. This is why it's attractive. They are holding retained earnings for future problems you can't predict, as we know from COVID. However, we also know that COVID is something that only happens once a century. Yes, it could happen tomorrow, but it's highly unlikely. This company handles business and individuals in the travel industry. Obviously, you can tell from the name. Based on the forward estimates, it's attractive. It has a low PE that I find very attractive also, but because of the volatility and because it really hasn't proved itself yet, but it has been getting better, I rated a buy, but only a half weight. Second company today is Kogan.com. Code on the ASX is KGN. It's trading just a little above $8. This chart's amazing. Look at the spike upwards, and then it totally crashed. It reminds me of the tech wreck of the late 90s, early 2000s. Now, I've been following Kogan for quite some time, and it's been a disaster. So if it wasn't for a viewer asking me, I would have dismissed it and just said, move on. However, this company was a disaster, but it did not go out of business. It stabilized, and if you look at the right side, it's starting to grow again. It has fixed all its problems. I like that. So if we take the here and now and forget the past other than a great learning experience, this is what the numbers show. One has a market cap almost $1 billion at $850 million. 12-month price target is $12.40. That's a significant increase from where it's trading now. However, it's lower than many brokers had 6 months ago as a price target. The revenue growth rate from 2023 to 2026 is only 5% per annum. However, the earnings per share growth, now this is slightly different from 2024 to 2026, is a huge 45%. This is off of a low base because in 2023, it's estimated they're going to lose money. The dividend growth rate, same thing, no dividend in 23, but they're going to start paying a dividend in 24 and beyond. And for the 24 to 26 period, the dividend's growing at around 70% per annum, as long as these estimates remain true. The PE on the 25 earnings estimate of 22 cents is 36 times. For a company that has this growth potential, that's not necessarily overvalued. The yield on the 25 dividend estimate of 15.5 cents, it's only 2%. Well, high growth companies, they reinvest their earnings back into the business. Free cash flow is around 3.5%, payout ratio 65% when they start paying dividends. Kogan.com is Australian online retailer. They don't handle food, but they handle most other things. They started off hot, had high growth, and crashed. Huge amount of structural problems. This classic case management couldn't handle their growth. Now, though, it's on track. I rated it by because it has very good forward prospects, but because of its past, I also give it a half weight. As always, if you want to learn more about anything I covered or you have any suggestions for companies to cover, send an email to stockwatch@fnn.com.au and address it to me, Chris Pedersen. I hope you have a great week and that it's profitable. Thank you.